I will be talking about some of the key questions that the banks and the fintech are facing and why the answers to those questions can be a matter of survival for these banks and fintech. The second section of this video, I will be talking about the 5 key themes or pillars that can help the banks or the fintech to build a future-proof bank. And we go live. Hi, this is Sidhartha Sharma. Welcome to the Digital Transformation Talks. The purpose behind these videos is to share some ideas with the CXOs and the founders who want to understand the digital disruption better and help them take decisions that impact the businesses. Today's topic is around how to build a future-proof bank. I write passionately about this topic. I wrote an article titled How to Build a Future-Proof Bank, and it went viral. It was retweeted 70 or 80 times, and a lot of CXOs and the founders just reached out to me to have a discussion, just to informally exchange ideas. So I thought that it would be a good idea to just summarize some of the key findings from that article in this video. Let's dive in. I will be talking about some of the key questions that the banks and the fintech are facing and why those questions are important for the 2020s and why the answers to those questions can be a matter of survival for these banks and fintech. The second section of this video, I will be talking about the 5 key themes or pillars that can help the banks or the fintech to build a future-proof bank. And when I say building a future-proof bank, it can come from traditional banks that we all know of, or it could come from a new age fintech startup which might not even be in existence yet or might be just starting up with their first product. But if they get those 5 pillars right, then chances are high that they will be able to survive the disruption that is unbundling the banking and the financial services sector very fast. So let's dive in. At the outset, there are a couple of points I want to make. First is, whenever I see this bank versus fintech debate, I realize and I notice, and I'm sure you must have noticed as well, that the debate is very binary in nature. It is either banks will survive or the fintech will survive. And more often than not, since we like to cheer for the underdog, we always say that the fintech are going to disrupt the banking. Now, that might be true to a certain extent, but the fact that these big traditional banks have been doing business for decades and managed to build a solid customer user base and at the same time have their trust, they are not going to go away overnight. So the banks are here to stay, and the point that I want to make is that not all big banks will be disrupted. Some will self-disrupt themselves, and as a result, they will adapt. They will reinvent their legacy systems and rebuild the models from scratch, and they will survive the 2020s. I cannot comment about 2030s because the world is changing so fast. The second point that I would like to make is about the profitability of the fintech, of whether the fintechs will stay there in the long run. The answer is yes, they are not going to go away. Never judge the success of a fintech or any other startup by the fact whether they are profitable or not. Judge the success by the extent they have managed to successfully transform customer behavior in an irreversible manner. And I will come to that when I'm talking about customer experience and trust. It is very critical for both the banks and the fintech to realize that the competition is strong, they have to coexist, and it will be the survival of the fittest. I would say that the disruption is actually in the favor of fintech because they have the opportunity to start from scratch, while at the same time the banks can reinvent themselves because they know banking business. When it comes to disruption, the advantage is always there with somebody who has the opportunity to redesign things from scratch. So let's get started. In the first section of this talk, I will be talking about few key questions that both the banks and the fintech must think about if they want to get the 2020 strategy right. The first key question that is facing the banks and the fintech is that will the banks manage to shift the legacy models and systems before the fintechs managed to get the scale? 20 years ago, there were no alternatives available to the banks. If you had to move money, if you had to start a business, you needed a bank. But now there are so many alternatives available in the form of payments, digital wallets, fintech startup can solve that problem. It's very important that the banks need to change their legacy models or the legacy, and I'm not just referring to the legacy systems or the technology, I'm referring to the legacy business models that they need to change. because fintech is going to scale up very fast. The second question for the banks and the fintech is that how quickly does the customer trust convert into transactions for the fintech? Now here I want to bring in certain basic principles of the attention economy that we live in. In addition to the wallet share, there are a couple of other things that matter a lot, which is the mind share and the time share. And what these good fintech or the payment platforms, some of them are even mobility platforms, they have managed to do is they have managed to gain the customer trust, and they have managed to gain the mind share and the time share of the customer. And as a result, the customer is willing to do transaction on these platforms. Now the real challenge is that while they have been doing all sorts of other transactions on these platforms, will the customer be confident enough to do the banking kind of transactions which are big in nature, which perhaps may be related to their deposit accounts or their business accounts on these same fintech platforms? The answer is yes, the behavior is shifting towards that, but the onus lies on these big fintech companies to ensure that the customer trust is there so that they could disrupt the bank. Banks already enjoy this privilege, by the way. The next question is that who gets the customer experience plus success equation right? We are living in the age wherein the customer experience has been redefined in an irreversible manner, and at the same time, the customers want to be successful. And whether it's a business customer or whether it's a retail customer, when they are partnering with a bank or a fintech, they are looking for some returns on their investment. And that investment is not just the money investment or the deposits they are making in the bank, but even the fact that they are doing some transaction or business or dealing with that bank or a fintech platform, they are expecting certain kind of success or certain level of minimum customer experience. That equation needs to be right. Generally, you will not see coming in terms of fintech platforms. You will see it in the cloud related disruption. But the fact that I have added this here is that this is how I see the banks versus fintech equation evolving. Perhaps 2 to 3 years down the line, it will be the customer success. How well do the banks and the fintech actually help the SMEs win in the 2020s? How much do they help them in succeeding? That is what is going to determine their success. Fourth critical question is that how will the regulations related to digital only banks, open banking, data privacy, digital currencies, blockchain and decentralized finance or DeFi evolve? Now, this point is so critical that I can talk on this point alone for a couple of hours, and I'm going to dedicate a specific talk just to blockchain and decentralized finance, because this is one of those variables that can just disrupt banking and fintech forever, and it is going to do that. So it's not that it is not going to do that. We will soon see some massive disruption that will be brought in by blockchain and DeFi. But having said that, this does not mean the end of banking or the fintech as we know. It is going to coexist, and perhaps it's going to take few years of reinvention or disruption before the model settles in. But it is very critical for the banks to understand that how well these regulations pan out. Which brings me to the second part of this talk, that how to build a future-proof bank. Is there a winning strategy or a formula? I think there is. I have written down the 25 journeys that a traditional bank should be thinking about when they are building a bank of the future. And those same journeys also apply to the fintech that have received the banking licenses and are trying to build the bank of the future. But in this talk, I am going to talk about the 5 key pillars to build a bank of the future. And these pillars are applicable to both traditional banks who are trying to reinvent themselves, as well as the fintech who have received the digital-only banks licenses or are trying to disrupt the banks. By definition, remember one thing: banking is not one single product. Banking is like a bouquet of products. There are investment products, there are lending products, there are treasury products, and there are so many other products put together. Label them as the banking products, right? But we are living in the age of disruption, wherein the fintech startups are slowly disrupting one of these products at a time, and they are taking away the profitable products like the lending solutions, the investment products, insurance products, and different category of trade finance products. And when the fintechs are attacking these, one by one they are actually squeezing the margins of the banks. Hence it's very important for the banks to understand that that is how banking is getting unbundled. It is not that he's like taking away all their products at one go. The fintechs are attacking from all directions, and not just the fintechs. There are mobility players, there are e-commerce players, and there are social platform or social network players which have some kind of banking regulations that is favoring them, and as a result they are building some products that are disrupting the banks or taking away the profitable customer base. And that is where the banks are losing to the fintech, and they need to be very careful about how to reinvent themselves for the future. And another interesting phenomena that is occurring is we are living in the age of open banking, and digital only bank licenses are being granted. Recently, Monetary Authority of Singapore granted 4 digital bank licenses, wherein 2 of them were the digital full bank licenses and 2 of them were digital wholesale banking licenses. And these are the banks which will not have too much of physical or branch presence, and trust me, their operation cost is going to be so low that they can actually offer products at much lower cost to the customers in the region compared to the traditional banks, which are asset heavy, which are heavy on the number of employees that they have, and which have a lot of legacy system costs that they need to constantly pay for. And that is wherein these 5 pillars become even more important for the banks. So it's kind of a wake up opportunity for the traditional banks. And having said that, the fact that I am a big believer of the old banking structures as well, I have been following the investments that they have been making into the technology. Trust me, some of them are making some genuine and real efforts to reinvent themselves when it comes to technology, ecosystem thinking, API strategy. And these banks are definitely well suited to survive the 2020s and might even acquire a few fintechs.